Hey, everybody. We are back with the Emerge and See podcast here on any number of sources. Today, we're going to talk about some things that I was looking at talking about the other day. I just haven't really found myself the time um, to converse with you on it. And one of the things that we are looking at is believing what you see in the news compared to believing what's maybe not being spoken, or understanding the reasoning why what they're saying is what they're saying. Um, and there are many ways of looking at this, and I'm probably the best and the worst person to discuss them with you, but we're here and in our space, and we are creating an opportunity to decide how to see what the future holds. Now, obviously, there's a lot of reasons why people talk about improvement of circumstances. And then shortly after, they comment on how things actually got much worse. Now, that could be numbers in terms of the CV-19. That could be comments in relation to vaccines. That's definitely in regards to market volatility and quantitative easing, stimulus, blah, blah, blah. And this is one of the topics that we really need to understand. Fundamentals of economics don't change. Fundamentals of supply and demand don't change. The lag time of the outcomes of the fundamentals of these topics can vary. And they are manipulated by reserve banks, by obviously governments behind them, by pricing structures, as well as by the key factors that they determine to be the triggers for certain things such as inflation, deflation, currency price stability, taxation, and on. And ultimately, when we just look at information that's being given to us, we are being given the information that is best to be given to us. Not what is best for us to be given to us, but what is best for those that operate within our means. Now, trading commodities and shares for significant time of life, and witnessing supply and demand models from young enough to help grandparents while I'm just in high school, let's put it that way, gives me an opportunity to start to look beyond what is actually a fundamental flaw in what they are speaking. So I'd like us all to reference as to how we are referencing what's being said to us, where we're getting the information from. MSM, mainstream media, blah blah, has perhaps best interests as a whole, as opposed to spoken truth. I've found that out as an investigative journalist over years gone past, where topics are better off not being spoken about. Such as inoculation. Let's just say that, because if I start using other words, I'm going to get people in a fuss. And I'm just out there to inspire a little bit of outside research. And if there's an opportunity to deliver it, let's take a look at that. My interests in this particular discussion are: how does inflation get measured? Therefore, how does inflation on a global topic become measured? How is obviously the deflation of currency affected by, and what are the triggers that they use? Of course, the bigger triggers that are used tend to be the kind of less regularly purchased products: cars, TV sets, household items. To a degree, they'll implement food and very basic foods. Never is fresh food considered. And one of the things that we consider in relation to commodities and the supply of commodities is a number of other factors where we're predicting them based on environmental cycles. So there's much at play in regards to what is spoken about in terms of inflation. Simply property inflation is way above. Quantitative easing is designed to continue. It's been expected throughout this stimulus period that unemployment has gone to all new heights, whilst corporations that would be filing for bankruptcy remain open for business. Not the outcome once stimulus or quantitative easing reduces and limits job opportunities. Bond market. So the bonds. Now, governments keep buying bonds to be able to provide stimulus to the economy and not turn us into a massive deflationary spiral. What occurs in those situations is when those bonds start to do well, or better than expected and better than they are currently, becomes a very negative impact on the organisations that have been purchasing them. We end up with a circumstance of a backfire and a hyperinflation situation occurring. Negative interest rates has been a topic for a long time in my mind, and when I look at what is the potential of our government's decisions, we have to take a look at what policies have been put through the Houses and Senate in recent years. Those understanding where decisions come from and how they're implemented well before they're injected into society become more aware and capable of seeing what the outcome would likely be. Now, at the same time as we have so much mixed information in terms of the return of normalcy in the economic spectrum on a global scale, because we have to consider ourselves as global participants. The costs of the CV-19 are untold because they are alarming, and alarmists are not necessarily valued. So we don't want to be alarmist, we want to be educationalist so that you guys can understand where your perspectives are going to be going to. We look at the recent information where Boris Johnson, PM of England, has just stated that people just need to get used to having a jab and that they're going to have to continue having a jab. Now, that's the first spoken entity along that line after months of this particular lad speaking about how interesting natural immunity after having it might give you 3 to 6 months, depending on the percentage of transmittable variants are out there. We then have the vaccine that is tested and may last a year. We have an economy globally that is continually recognizing that its forecasts have been wrong because they were not meant to be right, and therefore further changes are necessary. And in the future, more lockdowns, and maybe England's not opening up until summer. Let's have a look at Indonesia's shut down for 2 years from international travellers. Herd immunity, Israel saying that even if they inoculated everybody, that they would never achieve herd immunity. So what are we doing in terms of making guesses of where things are actually going, and listening to people's forecasts from over a year ago to people not listening to other forecasts 2 years ago when we were telling you this was coming. So where are we going to be looking at ourselves in it? Perhaps we're going to see ourselves in a circumstance where we're always following what information is being told to us, and then we are subject to the leniency that these organisations and governments and systems of financial influence deliver things towards us. There are many aspects to inflation, and the bigger things that we need to be looking at are what we have to be purchasing every day. Now, no one's going to tell you food inflation is occurring, although I'm pretty sure you're all recognising that while prices were a bit ridiculous, things seem to cost even more for less in your basket. Choosing cheap food, well, what's that going to do for your immunity? And if COVID's a thing, then what's that going to do for your immunity? So where is your investment lying? And where are the investors lying to you? So let's take a look at some deeper topics down the track. But inflation is a big one. Commodity prices are surging across all aspects, and there are a number of reasons for that. I recommend that we do some research in those topics to determine as to how your investments might go towards the future, what you might choose to purchase now compared to later, because the resurgence of intelligence in economic situations is to purchase before the cost of something rises so much, to increase the value of your circumstance. And while certain investment hedge funds and industries are battling with meme stock and all kinds of floating values, bloating values, what we should be taking a look at is maybe not so much where we can be more volatile in terms of our risk and asset base, but take a look at what really is risk and therefore asset based. And while there could be many reasons why we look at cryptocurrencies compared to traditional hedging circumstances, precious metals, investment in circumstances surrounding them, commodity-based industries, we really want to be able to look at where we're going to put ourselves in the next 3 months, 6 months, 6 years, 10 years. So those are the factors that I put into place in relation to all the foreseeable opportunities. So when we start talking about where we're going to invest, you can take information from as many sources as you possibly can. You can take a look at the industries surrounding them. You can take a look at the cycles and the swings that surround them. You can take a look at how the swings repeat themselves, and how, when they do, what occurs during those times, and what triggers those swings. And then take a look at what is occurring in today's age, and take a look at what those swings could become like, considering the scale of the triggers today. For instance, not many people even know what the GFC was. And yet, back in the day, the radio show Dub Monday and me were forecasting it in 2006. Now, it didn't really hit till 2008, and it stuck around till 2010-11, and we've seen a whole bunch of shifting of economic mismanagement, financial loan desperation mismanagement, fossil fuel industry investment mismanagement, superannuation investment mismanagement, and Reserve Bank financial asset mismanagement since then. Roughly to the scale, around 50 billion was the Australian government's investment into the economy at that time to provide stimulus to the households and some industry in relation to building the economy and maintaining its growth outside of our 2008 circumstances. While our debt to GDP ratios were far lower than any of the other nations that superseded Japan even at that time, we did well. And people want to say it was a mining boom. Well, how much money does the government really make out of mining, considering it's tax-free and all the other things that go with it? So, yes and no. The mining boom has really come since then, in terms of exploration and the opportunity for sign-off on and ease of red tape to go through the processes. That $50 billion was spent over 3 years predominantly. Now the Australian government, in 12 months, actually it's under 12 months to be honest, 700 billion has been floated into our economic system. And they're lying to you about the impact of that. So, what happens next? Well, as an apocalyptimist, great things. As a realist, questionable things. Circumstantially, it all depends on your position. Money in the bank with negative interest rates. If we took a look at interest rates at the moment, and we took a look at if you had money in the bank and you are getting your sweet FA in return from the bank, then you're looking at the costs in relation to having your money in the bank, and we're taking a look at also whatever's not the inflationary rate at the moment around. You are dealing with negative interest rates. And compared to 6 years ago, if you had the same amount of money in a bank over, I think about 10 or 15 years, let's say you had $100,000 in the bank for 10 years, you would be about $98,000 to $120,000 worse off now than you would have been 6 years ago in the already then low banking interest rate circumstances. So that's a negative impact. What happens when QE runs out? What sudden impacts to markets occur when QE runs out? How quickly can you eject yourself from those markets when the QE runs out? And what will you move across to? which by then might be a little bit too late, or certainly not as valuable an increase when the QE runs out. So are you ahead of the curve, on the curve, behind the curve? These days are so volatile, and you're following what is being told to you, so you're already behind the curve. I would classify myself just before the curve in a volatile market today. I give myself like a week or 10 days to respond. 15 years ago, I was 15 months ahead of the curve. Now, we still know that the predictions are right, what's going to be happening, and the circumstances of CV19 being the best reasoning to say that it's not the system failing, it's this particular thing, which the WHO has got its own outcomes from, and it still says it can't deliver a proper outcome, although we've made our decision for at least another 12 months. So, again, when you're listening to what you're told today, you're feeling less in control of what is going to be happening tomorrow. So that's why Emergency is here, to explore the realities behind the picture that is requiring a bigger perspective, in a similar way as astrology being the tool of billionaires. While I'm not a billionaire, they maybe don't actually have a thought, or they employ people like me to think for them beyond the box and beyond what actually designed the box. So we're talking inflation. It's a big topic that is not going to be spoken to you until you already have been hit by it, and by then it'll be too late to respond to it. So money in the bank, money in EFTs, watch your liquidity. That's about enough for today. Be careful of inflation, because it's not there until it is, and it's always been there until you realized that, well, it wasn't the rate of inflation that they were talking about. And the inflation that they were talking about was purchasing things that really you might sit in front of too much. Cars and TVs, but just don't purchase them often enough. So let's look at the bigger picture. Signing out from one place to another. Be wise. Dubwise.